have you been paying for your personal expenses using your business bank account? So you already probably know somewhere deep down in the interwebs, you probably already read that that is a no-no. And there's reasons why there's a no-no, but I want to bring you some good news. If you do, if you do use your business, finances to pay for your personal expenses, it's not the end of the world. There's ways that you could categorize this and that you could account for this without getting yourself in trouble. So the main reason is you don't want to include your personal expenses as a business tax deduction, right? Because if you're doing that, the IRS doesn't allow that, and then you could get into big trouble and have to pay back taxes and get penalties and whatnot. So it happens though. So if you have, a business checking account and you write a check, or you are at the store, let's say you're at the grocery store and you pay with your debit card, your business debit card, or you pay with your business credit card, if the world is not over, and it's okay if you do that. The way that you want to handle that is that you don't want to pretend it didn't happen. And so I've been doing a lot of cleanup jobs for my clients lately, and I've noticed a pattern of, importing everything into QuickBooks, and these business owners are just excluding this from their finances totally, which is not a correct way of accounting, because when you go in and you reconcile your bank accounts, you are comparing what's in your bank account to what's in your accounting system. So if you're saying that those personal expenses never happen, your accounting system is going to show that you have more money than you really do in your bank account. So you don't want that. So what is the solution? The solution is very simple. First, do not delete these transactions. They are transactions that hit your business bank account. They need to be accounted for. The way that you would handle this is that you would classify it as an owner's draw. So an owner's draw is an equity account. So it's not going to touch your balance. It's not going to touch your income statement, which is your income and expenses. Now, your profit statement, or your profit and loss statement, is what you're going to use when you're filing your taxes. The issue with using your personal account, is just that you don't want to include that as a business expense, because it's not. And you don't want to end up accidentally claiming it as a business expense and deduct your taxable income, because if you were to ever get audited and the IRS finds that out, you're going to have to pay back taxes, and you're going to owe money for your taxes because you said, that a personal expense was a business expense and you deducted your income, your taxable income that way. So again, the solution is not to completely pretend that those didn't happen, because you want your bank account balances to match your accounting system. The solution is to categorize those as an owner's draw. An owner's draw is not going to affect your taxes. Now, let's have a serious talk, because if it's like a recurring thing, then you want to make sure that you're separating your business from your personal. You have two separate accounts. When you commingle these funds, what ends up happening is that it gets very messy, and it gets really difficult to distinguish what is personal and what is business. And if you are doing your books yourself, then it gets a little bit messy. If you're hiring somebody to do it, it gets even more messy, because it's very difficult for somebody that does not, spend your money to identify what these expenses are for. So taking that ends up taking more of your bookkeeper's time or your accountant's time in distinguishing what is what. Another thing is that if you're an LLC, you definitely want two business bank accounts, and you do not want to commingle those funds, because as an LLC, you're separating the liability from yourself. So your business is the entity, your business is the one that's responsible for its finances. So if you're commingling it's not a good thing. It really affects the way that you're able to claim that separation of liability. So you want to make sure you're not doing that. So at the end of the day, it saves you from a lot of headache. It saves you money at the end of the day whenever you are actually trying to get everything done, or you're paying someone to do it. It's just a lot quicker, a lot easier, a lot cleaner, and you want transparency. You want transparency transparency for your finances, because it's just going to make things a lot more streamlined for your business. You're going to get yourself out of trouble, or potentially get out of trouble with the IRS, and legally if you're an LLC. So just make sure you're separating those out. All right, so if you have any questions, or you're not sure where to start in, getting your books up to date and reconciled, because there's a lot of personal expenses, feel free to reach out to me. I hold free strategy sessions, where I go over your business goals and what it is you're looking for, and I help it get all the books straightened up, so that way when it comes to tax season, it's as pain-free as possible, and you are able to have accurate finances at month after month, so you can make informed decisions for your business. All right, guys, well, I'll talk to you next time.